will mortgage rates go down in 2026? So this is the question, right? Will it go down? So the Federal Reserve has lowered the Fed funds rate 3 times in 2025. So what does this mean for mortgage rates heading into 20? So the Fed has indicated that it plans to cut its rate only once in 2026 due to several factors, including the public's negative sentiment regarding this news. There's also a good chance that rates won't fall too drastically next year. Okay, it's all logical, right? Unfortunately, we are emotionally driven creatures, and when these type of things happen, it causes a crazy amount of motion, and then it dictates what the market does. Even though sometimes the emotion is not grounded in the reality, it does cause drastic things to happen. So, should you wait to buy until mortgage rates go down? In short, no. You probably shouldn't wait to buy a home until mortgage rates drop to 6% or lower. Mortgage rates are just one part of the affordability equation. You also have to consider home prices, a factor of housing supply and demand. The current housing market is in a crunch. So yeah, look, waiting. Okay, let's just go through this. What we just talked about is the market is still seeing a 2 to 3% inflation of the home value. If nothing was to change right now, obviously some kind of disaster could strike and things affect us, and the housing market could crash. The reality is when we look at data and we hear what the economists are saying, we see what's going on. We don't see that in the makeup right now. So if we're don't gamble. Like right now, if you were to look at the industry as a whole, you would say that you should buy. There's no reason to wait. With inflation still being above, income catching up, you need to buy because you can always refinance. Let's hypothetically, let's say the interest rate does go down. Great. Go refinance then and get the lower rate. Big deal. But if you wait to buy, well, you're losing equity. Every month that goes by, you're losing equity of ownership of something. So you should buy a house. Like you should buy. So I don't even need to read that. So it says if you crave the comforts of home ownership, the best strategy in today's market may be to buy what you can afford, whether that means a smaller house or a condo instead of a single family home. Owning something puts you in a position to start building equity. Yes, what I just said, right? Yeah, there we go. Let me give you some actionable items here just to think. So when it comes to like the financial strategy here, you need to create you need to think through this. When you're having a consultation with a buyer, cost of waiting sheet. Like you need to have a sheet that says if you were to buy at 6.45% versus 6%, you need to go and have a sheet broken down showing them the true numbers of that. And then take, what I love the closing sheets. I love the sheet where it's taking into consideration what your closing costs are. And when you sit down with the client and you break that all down for them, and they can see like if you bought a house for this price and you got this interest rate, here's that number. And then if you did it for this, here's that number. But then when you factor in inflation and what's going on in the market and the job market and income and all those type of things in that buyer consultation, you will help them understand money. You'll help them understand. So you need to have that financial conversation with them, the cost of waiting. So get in there, get into the data, get into the numbers, run math, and figure out what the difference is in a 6.5 to a 6% rate. What is the difference in waiting versus inflation versus the amount of inventory we have now? What are they losing? Also, what I would then consider you do, and this is just a tactic for those that are considering going into, video and stuff. How about interviewing a lender? Talk to the lender about alternative loan products that they're talking about, right? There's a lot of things kind of circulating again, like ARMs and 2-to-1 buy downs and grant money and those type of things. Why not talk to a lender and say, hey, could I interview you? Could we talk about alternative loan products for my clients and talk about that? Then you can use that video to promote on your social media, giving something of value back to your possible clients. And then you become the source of knowledge and helping them get off the fence about buying or not, right? Then I would also lean into educating clients on what it is to, if you do buy now, how to refinance. Like, what does that look like? If you did do this and you bought now and you're worried about the interest rate and all this kind of stuff, what's the process of refinancing? Explain what refinancing looks like. I would say stop waiting for 3% mortgage rates. They're not coming back. But 5.9 to 6 to 6.15, somewhere in that zone could be there. So why are you going to wait at all for that little percentage when we're at 6.15 right now? You could actually buy right now, begin building equity instead of waiting for this thing to happen, which is where margins are so close. We're not getting below 6, I don't think. There you go. Hope you found that helpful.